following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got the markets in positive territory on some hot retail sales. You got Walmart trading higher this morning, and we got markets with green across the board, with the S&Ps up a nice even 50 points, trading at 55.27 right now. Excuse me, NASDAQ 100. We're up by about 218 points. That's 1.1% in the positive, 19,331. You get the Dow right now up 407 points, 40,524 in the Dow futures. And how about the Russell? On that hot retail sales, the economy powering forward. Russell up 2.2%. Crude up $1 to $77.99 right now. You jump over to the gold contract. There's a drop for you from 25.05 to 24.73. Now, we got a lot going on. You got to get over to yields to see what's happening in that gold contract. We got lower price, higher yield on the premise. This market just gets ahead of itself so quickly, so many times, right? What do we got? We got the 10-year back to 3.94%. 3.94, the yield on the 10-year. You put this thing on the daily. It's been quite a ramp up to higher price, lower yield. Maybe the market got ahead of itself a little bit, okay? Still probably going to get 25 basis points in September. But you can see, this is not the economy that usually encompasses a Fed that comes in with emergency. Remember, what was the conversation a week or two ago, right? When we were talking about, when I say we, the general conversation in the market, 50 basis point emergency, 75 basis point emergency. They need to cut 6 times immediately. That's not where the data is just yet. It might get there, but we're not there just yet. So yields are higher this morning. The economy remains strong. Retail sales are on fire, and we have the S&Ps now trading at 55.29. You back it up to last Monday, we were down at 51.20. You now have the S&Ps up a solid 400 plus points from that spike low, and where we were on August 8th, just a week ago, you were at 51.82. Pretty remarkable, the acceleration we've had. Those are daily bars, and we are now less than 200 points from the all-time highs in the S&Ps. Pretty remarkable. So we got the 10-year just under 4% right now, and that, of course, weakening the price of where bonds are trading. That's weakening the gold contract. You have strength in the dollar, to say the least, right? Look at that, man. From 102.5 to 103.22. 102.5 to 103.22 on that move on the retail sales. And let's get into it. Why not? Retail sales pick up by more than forecast in a broad advance, is how Bloomberg puts it out here. How about the month-over-month numbers? Retail sales, month-over-month, up a full percentage point. The estimate was only 0.4. Crazy. Excluding autos and gas, up 0.4%. They were looking for 0.2, and the control group up 0.3. They were looking for 0.1. 10 of the 13 categories tracked posted increases. Car sales bounced back after they had the cyber attack on auto dealerships, led to a sizable drop in June. Electronics and appliances also posted solid gains. E-commerce sales rose at a modest clip, reflecting heavy discounting in the period by Amazon's Prime Day and other promotions from Walmart and Target. And the report showcases a consumer that's holding up despite higher borrowing costs, a cooling labor market, and an uncertain economic outlook. But guess what? The American consumer, they're powering forward, man. And they're doing it well, and it's showing up in the numbers. And it's not just showing up on retail sales, it's showing up on Walmart sales. So check out Walmart, man. Walmart, we'll get into their numbers right now. Walmart, from $68 to $74. I mean, that's going to be almost a 9% jump right now at Walmart. Target on the heels of that acceleration from 136 to 144. You know, I will give you my anecdotal on Target. We spend a lot of time in Target because that's kind of Tommy's Toys R Us of the current day. We get to run around. He plays with some toys. We bought a stretchy Spider-Man in there a couple days ago. I have noticed that Target seems to be becoming a little bit more competitive. I'll tell you an anecdotal here, right? Target, their refrigerated food section is not that large in context of many grocery stores, right? So I don't usually get fruit there. I don't get chicken there. I'll get that at either Sam's has a good selection sometimes, which is Walmart. I get it at Publix occasionally as well. But just the other day, I found some fantastic skinless, boneless chicken breasts. $2.69 a pound at Target, which I think is what I pay at Sam's. And not quite as big of a purchase. I said to myself, Target has good chicken breasts at $2.69 a pound now. Where did that come from? Are they going to really start competing to that degree? Anecdotal, I know, but they have underperformed dramatically. Walmart, I mean, look at where Target is, right? You're going to be, yesterday you came in at 135. You're actually lower on the year versus Walmart shares. It's been on fire, man. You come into the year on Walmart at 52. You come in at 68. We're going to blow apart all-time highs at 74 on their earnings. And we jump over to Walmart earnings this morning. We got to scroll all the way up here. Shoppers flock to Walmart, powering its earnings and its sales. Retail giant says U.S. consumer spending is steady and raised the sales forecast for the year. You got to love it, man. And check out that year-to-date performance. Walmart in the blue, S&P in the gray. And as I just showed you, if you put Target on this, Target is like flat, and they were lower for a dramatic portion. So Walmart getting it done, even in the face of competition with something like that. Sales were consistent month to month in the quarter. Through a long inflationary period, shoppers continued to gravitate to deals such as buying more store brands, he said, but not more than in recent quarters. Consumers are showing, I wouldn't say strength, but lack of weakness. That's an interesting way to put things, right? Yeah, you get into here. Walmart even saw a slight uptick in its general merchandise category, discretionary items such as electronics and home goods, which have been in decline for 11 quarters. It's crazy, man. They're on fire. And you get into the guidance there. Let's see. Where are they? There we are, raising the guidance. So Walmart increased its profit and sales expectations for the full year. It now expects net sales to increase 3.75 to 4.75, up from a previous estimate of 3 to 4%. Adjusted earnings are going to increase 235 to 243, up from a previous 223 to 237. You know, this is, I mean, they're going itty bitty raises here. Right? Under promise, over deliver. Those are numbers they probably think they can still come in on the high side. Otherwise, they wouldn't be too happy to jack things up. But look at the comp store sales. Change from a year earlier. Amazing they can carry these numbers. And now you're comping against, remember the worry was you're going to be comping against these numbers, and that's going to be a difficult comp. Walmart's getting it done, man. They're looking at second quarter fiscal year 2025 of still growing comp sales 4.2%. Just mammoth numbers, man. Yeah. Overall, in the July quarter, Walmart income rose 8.5% to $7.9 billion on revenue of $169.3 billion, up 4.8%. Net income did fall a year ago when it booked large investment gains, is what they got out there. But yeah, Walmart is on fire, man, and they are going to catch an all-time high on the open. Retail sales on fire. You jump over to some other retailers. Amazon is going to pop $5 on the open. They're going to be at 175. You get a gap out here for Amazon. The low on that gap is 176.80, where you gapped away on their earnings, and you're almost going to be back to 175, and that's from trading at 151, right? What's that? $25 on Amazon. Stay tuned, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 48 points, NASDAQ 100 up by 210, Dow up 389. We're going to get a pop on the open, and it is pretty remarkable when you look at the move that we've had, the volatility we've had from last Monday, where we were in these markets as we had an escalation on that carry trade rollover. You had the NASDAQ 100, folks, 2,000 points. How about it? We were down to 17,300. We're at 19,300, just like that. We got the VIX right now. You jump over to the volatility index. How about a 15-14, below the historical average? Anytime you get freaked out in this market, just remember how quickly things have reversed, and it's happened yet again, right? We are still in a path where the Fed is probably going to cut in September. But remember how quickly the calls were for a 50 basis point emergency cut. I don't think you're going to hear those calls anymore, man. I think those are gone already. And we're talking about a period of a week or two that everybody's flipping out over one data point or the next. And you can see why the Fed is making the case that they're making. Okay? If retail sales are growing 1% month over month right now in an environment where we have the rate at 5.25% to 5.5% that's supposed to be squeezing this economy, what would retail sales look like if the Fed dropped interest rates 1.5% to 2 percentage points? That's the conversation that they have, and it's a real conversation. So we'll see where it goes. We jump over to the 10-year, as I stated. We're down by 28 ticks right now. We got the 10-year yield flirting with about 3.94%. So we jump over to this article from the Journal. Saw this morning where we did it here. Yeah, out this morning early. Why falling mortgage rates aren't a quick fix for frustrated home buyers is how they put it here. Now, you know, there's a lot going on, and the general theme here is that people are stretched a little bit, Housing prices are still high, record housing prices, limited inventory, and renewed recession fears, okay? But no matter what happens, man, and they use, we're at 6.5% right now, okay? We did peak at 8% at one point. Well, nobody was buying a house at 8%, folks, all right? They were, but not with a mortgage, right? And I'm paraphrasing, of course. But just some quick numbers, all right? We're at 6.5% right now. $350,000 house, and yeah, you're going higher on a lot of these. All right, let's go to 400. All right, let's go to $400,000 house. They got $350,000 brand new houses around me in Lakeland, but in many areas not so much. Right, you push it to 6.75%, which is where we were just recently, and you're looking at about a $2,600 payment. Okay, $2,600 payment. You bring that down to 5.75. and you shave $260 off. You're at $2,334, and you bring it down to 4.75, and you're at under $2,100. So you go from 6.75 at $2,600 a month. If we get down to 4.75, we're at $2,100, and we're already right now at 6.5. Okay, we're at 6.5%. So a $400,000 house, and that's a loan. Okay, so if you put money down up front, but you're just doing the straight up loan value. So let's say you put some money down on an initial payment. You got $350,000 that you got to put into your mortgage. At 6.5%, you're talking about $2,200. And if we get down to, and I'm not saying we're going down, but you bring it down to $1,800, it's a huge chunk of change when you look on a percentage basis what that is. Okay, so it is going to matter. I disagree a little bit in terms of the article and how it's not going to save everything. Okay, it will be a big factor for sure. And they have, the examples they use is they use the 8% example. Okay, that's not the example to look at. What they do state in this article, okay, is that the mortgage rate at 6.5% already has factored in some of the cuts that are probably coming down the line. That is very true. Okay, that is very true. But the part I wanted to get to, which is cool here, okay? Let me get this one. Because this is what I've talked about before. Yeah, check this out, okay? Now, this is a Brookings article, post, not even sure the date, but it shows the historical. And this is what I was looking at, okay? I've talked about this before. The spread between a 30-year fixed mortgage and our 10-year has historically hovered around 2%, but you do get some spikes, and we are in quite a spike right now, okay? But historically, this number should go back down to about 2%. You see where we are, okay? Historically, where the 10-year is, the mortgage rate, and you can see many times it was at about 1.5 difference, okay? Well, the 10-year right now is under 4%. That would put mortgage rates at between 5.5 and 6%, just if they stay right where they are right now, okay? But that's not the case, okay? And the reason why it's not the case is because of a couple different factors. But the factor there, and this is your spread, right, that we're talking about here, okay? And a couple of the different factors here are, number one, you have short-term rates very high, okay? And short-term rates very high is going to contribute to the spread that you're going to get there. And you also have some default risks. Factors driving higher mortgage rates, okay? Duration adjustment, repayment risk. Since mortgages are typically held for fewer than 10 years, they have a shorter duration than 10-year treasuries, okay, since early 2022. And for the first time since 2000, the rate on a 7-year was higher than that on a 10-year. So you got some weird stuff happening here. But history repeats itself, okay? And if there is some normalization here, just look at the spikes we're in. Just look at where we are. And so it would make sense that you got mortgage rates that are going to come back down. Now, the one thing that you do have out there is that it will release some supply in this market. I was talking to Teddy Kegstad yesterday. We had a great conversation about it. There will be a release of supply. And so how is that going to factor into the housing? Okay. But you can't deny the demand, the amount of people sitting on the sidelines. I mean, I have 2 tenants in my property in Tampa right now, and one of them, I was just over there last week talking to him. a young couple, a guy and a girl, probably 26, 28, something like that years old. Both of them working. Great tenants. I'm very fortunate to have them. And, I'm joking that they're never allowed to buy a house. And, I was talking to them, though, in the same way and talking to them about rates and cuts. And you can see that the spot they're in is pretty tough. But they're a perfect example of somebody who's going to come running if rates go down another percentage or two. Right. And I say running and that the opportunity is just going to be present there and it's going to exist. Now, in the same aspect, you're going to have a bunch of people who might be able to sell their homes for the first time that weren't going to do that and where that goes out. But I found it interesting the Journal was putting it in that framing because, we may see some declines here. We're at 6.5% on a mortgage rate. We get the 10-year under 4% right now. And even if the Fed doesn't cut as quickly as you'd expect, I imagine mortgage rates are going to come down to a 5 handle at some point. Maybe, by the middle of next year, beginning of next year, middle of next year, we'll probably get a 5 handle for mortgages, which, the mentality of getting in a 5 handle alone, and then you see it reflected on the payments, and then you have your real estate broker saying, hey, rates were 8%, we got a 5 number right now, why don't you get in? I think it's a lot more reasonable. But nonetheless, today rates are going up because we got a strong economy and retail sales coming back to the open, folks. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month's subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and you got higher prices coming at you just like that. We got the S&Ps catching a bid even on the open right now. We're up by 57 points. That's at incline of more than 1%. NASDAQ 100, you're up by 1.23%, up by 240 points. The Dow inching 500 points higher, 1.3% in the Dow. And you got the Russell up by 2.2%. We jump around. So some of the high flyers. Walmart up by 7.6% on their numbers. Amazon, on the heels of retail sales, up by 3% on their numbers. 175.19 for Amazon. We jump over to Target shares, up by 4.8% on the retail sales and on Walmart, trading higher. Retail S&P is now up 60. Pretty remarkable. Yeah, we jump over to Starbucks. Quite the acceleration for them on Tuesday with their new CEO. They're a little bit lower this morning. We jump over to Chipotle Mexican Grill, losing their CEO, rebounding to about 51. We were at 56 before they lost that CEO I was talking about on the program on Tuesday. So you come into that at about 76. Look at this thing, man. So Starbucks, look at this. I think they got 1 billion shares outstanding, 1.1. And you trade from $77 up to $93.90. You basically gain, what is that, $17 billion in market cap. You're now looking at a company that's $106 billion. Yes, $106 billion market cap. You probably came into that, not even less, right? We came in at 76 times 1.1 billion. You're looking at 83. I mean, they gained 20 billion in market cap for their new CEO. Talk about sky-high expectations. A couple articles out here. Brian Nichols, I was reading about, he's going to have a remote office set up. Now, he's going to spend a lot of time at their headquarters in Seattle, Starbucks' headquarters, but he's going to have a remote office set up for himself where he is as well, which I think is somewhere in California. But he's had quite a run in terms of where he's been. From Doritos, he's worked with Pringles, and, of course, Chipotle. I was just reading another one. I think it's 770%. His is this the one? Yeah, I think Chipotle. Let me see if this is the one. Yeah, it is. During his tenure at Chipotle, the stock climbed 773%. How about that one? So that'll give you some ammunition when you come into the C-suite. You back up Chipotle. It's been on quite a run. Look at that. And what is remarkable is, do you remember when they had the salmonella outbreaks, right, and drove this equity? Now, we were much higher, but you drove it from $15 down to $5. You lost 60 or 70% of the value of that company, and then what? You take off and do a 10-bagger from $5 to 51. Nonetheless, you're trading higher today. S&P is up by 1%. And yeah, let's jump around to some of the FANG stocks. Apple shares up by 0.75% right now. You jump to Microsoft up by 0.4. NVIDIA shares, they give back some of the gains. They're flat this morning. Interesting when you got tech stocks trading higher across the board, but guess what? They're not in the retail category. So I guess retail's really taking it to the upside today. NVIDIA, though, they are flat. AMD up by 1%. Intel shares jumping around up by 2.5%. We check in on Tesla shares. There's a bid for you. Up by 3.8% for Tesla shares. Check back on Amazon. Give back slightly. Still up by about 2.5% for Amazon. Walmart on their numbers. Yeah, up an easy 7%. Decent numbers for Walmart. Now we jump around to some other action. Ulta. Buffett's got a stake in Ulta, and the market likes it. There you go. Up by 10% on that news that Buffett is building a stake, and, you know, I think he's seeing some value, right? Trading at the lowest price this thing's been at. That's 3 years. Let's go back. So Ulta Beauty trading at where it was in 2017, and Buffett says maybe there's some value there, and you get a pop of 10% higher on their numbers, up $35 to $364 as they have a new investor. We jump around to some of the banks this morning. Bank of America, there's a pop for you, up by about 1.8%. JP Morgan this morning up by 1.7%. Yeah. Citi, they're all getting a pop, up by 2.2%. Wells Fargo up by 2.7%. There's a pop. Let's check out the airlines this morning. Delta, there's a pop up by 3.3%. Look at this market, man. If the consumers have money, look at this. United's up by 3.8%. JetBlue, even JetBlue, I say, even JetBlue, up by 3%. Hits $4.50 yesterday for JetBlue. They came out with a convertible note offering, which is what had them tanking on Monday. You hit $4.50. And I'm looking, what is that last low we had down there? All the way to 342. 342, 450. Watch out for this one. Something Does not look right on that chart, to put it lightly. And you know what is remarkable? I was looking at this last night. We might not even get a monthly red bar, folks. We are right next to being positive. We're only 40 points away for a positive monthly bar after trading down. What did we open at? We opened at 55.74. We traded down to 51.20. So that's a move of about 454 points. 8%. You trade down 8%, and by August 15th, we almost got it all back, and you might not even have a red monthly bar at this point, and we're only at August 15th. We got a lot to go. We got Jackson Hole, of course, later. We got NVIDIA earnings later in the month, but some strong retail sales across the board. You can't deny it, man. All right, what else we got pulled up here? Yeah, we talked about Starbucks. Yeah, M&M's and Mars, they're buying Kellanova. Cisco's got cuts. Let's check in on Cisco. There you go. Cisco, up by 10% on their numbers, man. The market likes it. So Cisco, yeah. Man, they're going to reduce the global workforce by 7%, results in $1 billion of pre-tax charges. 700 to 800 million of that is going to be an impact that will be recognized in the current quarter. But guess what? Second round of major layoffs. And yeah, after they announced in February, they're going to cut more than 4,000 jobs, amounting to 5% of the workforce. And now they're going to say it's, they're going to reduce its global workforce by 7% as Cisco cuts over there. Yeah, we talked about Walmart and we talked about those retail sales. Coming back to those numbers, if you didn't see it at the kickoff of the program, those were the retail sales, man. Retail sales, month over month, 1%. Quite a number. Now, we had some misnomers potentially in June, right? Car companies had a big problem there after you had the cyber attack and auto dealerships. 10 of the 13 categories posted increases, though. That is a broad increase across the spectrum for retail sales. And then we also had some big events going on in July. You had Prime Day. I got a couple things over there. And then Walmart and Target were competing on Prime Day, so you had some big numbers there as well. But nonetheless, we get strong numbers coming at you. Now, this article is from a couple days ago, man. I was reading it yesterday, and I just wanted to touch on it because if you didn't get a chance to check this out, you could have some big changes coming down on Google, man. And, you know, it doesn't mean this company is going to go away, folks, anytime soon. Google's flat right now. You check out Google on a 3-year weekly. Quite a run from $83 at the beginning of 2022, more than a double bagger, up to $193. You're sitting at $162 right now. But the DOJ, they are considering some pretty stiff consequences for the antitrust suit. And one of them is chopping up this company. And it's pretty interesting. We'll talk about this when we come back. But yeah, that is an interesting one to say the least, man. In terms of, and this data already out into the stock. We'll talk a little bit about it as they're talking about potentially breaking up some of the monopolistic tendencies of Google. And what's interesting is it's kind of right on the edge of when they may be losing some of those monopolies. We'll be right back, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's up 54, markets holding on to those gains. We jump over to yields right now. You got the 10-year now down 31 ticks as we are now above 3.95%. Pretty remarkable. You jump over to the dollar. Pairing it a bit, we're at 103.08. We were at about 102.55 coming into those retail sales numbers. So what do we got? We got higher yield. You got dollar strength. That's going to be tough on the commodities. But gold holding up relatively well, considering we're at 24.82, technically positive $2 on the session, but well off where we were coming into that 8:30 number, which was at about 25.05. So jumping back to Google, and part of my thought process on this was, if this thing really sells off, if some of these, I want to call them ideas because they're not ideas. I mean, this is a negotiation straight out off of a ruling. Okay, but if you start talking about potentially breaking up Google, you might get quite a pullback, and maybe that'd be a buying opportunity because Google's got great products, man. YouTube is a product like almost no other that they control. That's always going to be the case. Okay, they're always going to be able to sell ads for YouTube. That is a generational product that's not going away, almost the likes of Instagram. But if you compare YouTube to Instagram, folks, it's a no-brainer. YouTube wins 10 times out of 10. Okay, Instagram, for all intents and purposes, could be a fad to a certain degree. Posting videos on the internet, that's not going to be a fad. That's around forever. It's the new way we consume many different aspects of viewing in terms of YouTube. You go down the YouTube rabbit hole. We've all been there. But nonetheless, so just hearing what they talk about, okay, because it's an interesting one. Justice Department discussions have intensified in the wake of the judge's ruling that Google illegally monopolized markets for online search and search text ads. Okay, now this decision is going to get appealed, but the judge has ordered both sides to begin plans for the second phase of the case, which will involve the government's proposals for restoring competition. Now, you gotta, this hasn't happened in a while, okay, but you have a judge ruling that they have illegally monopolized markets and forcing them to come up with remedies that restore competition, including a possible breakup request. The point being, the remedies are going to be large. If you actually consider that Google has been operating as a monopoly, the remedies necessary are probably going to be substantial to restore competition from that point, right? The U.S. plan will need to be accepted by the judge, who would then direct that company to apply. Google, A forced breakup of Google will be the biggest of a U.S. company since AT&T dismantled in the 1980s. I remember that. I remember my dad talking about it. I remember all the baby bells, right? I was only a toddler at that time, but I remember the conversations taking place. And remember, those baby bells, they all took off on their own right? So it's something that there's still going to be value there. They just might not be able to capitalize on the way that they have been, okay? So Justice Department attorneys have raised concerns that the company's search dominance gives it an advantage in deploying AI technology, right? As part of a remedy, the government might seek to stop the company from forcing websites to allow their content to be used for Google's AI products in order to appear in search results. Divesting Android operating system on 2.5 billion devices worldwide is one of the remedies, right? Think about how this thing is going to contribute to the shape of that company. In his decision, the judge found that Google requires device makers to sign agreements to gain access to apps like Gmail and Google Play Store, basically necessary, right? Those agreements require Google search widget and Chrome browser to be installed without being able to be deleted. Probably going to see that change if the appeal doesn't go through. Now, this is going to be appealed. Anything can change, okay? But yeah, it's a big one. And the decision follows a verdict by California jury in December that found the company monopolized Android app distribution, right? Yeah. And then you get into Google monopolized the advertisements that appear on the top of search results, okay? Those are sold via Google Ads, which used to be AdWords in 2018. And one of the things, 2/3 of Google's revenue comes from search ads, amounting more than $100 billion in 2020. If the Justice Department does not call for Google to sell off AdWords, it could ask for interoperability requirements that would make it work seamlessly with other search engines, etc. Okay, and then you look at the data. And another option would be require Google to divest or license the data to rivals, such as Microsoft or DuckDuckGo or others, I'm sure. That's a big one as well, right? Yeah, Google, they have 16 times as much as the next closest competitor. Now, that's probably going to change with Bing coming down the line. And that's why I find it so interesting that, I mean, this is probably a little late to the party, which makes it so difficult here. For the first time in decades, you have an actual competitor with ChatGPT, with Microsoft Bing. There are times when I go to ChatGPT to search something on the internet, which I never did before for 20 years. And now I do. Many times I actually go to ChatGPT to look something up to get an answer to something I have. And yeah, and they go over here that requiring monopolists to allow rivals to have some access to technology has been a remedy in previous cases. Don't think this is not going to happen. It's happened before. In the Justice Department's first case against AT&T in 1956, the company was required to provide royalty-free license to its patents, not parents. So yeah, when they break up a monopoly, man, they can do some big things, because to restore competition from a monopoly, it usually takes big things. In the antitrust case against Microsoft, the settlement required Microsoft to make some of its so-called application programming interfaces, or APIs, as we're all familiar with now, available to third parties for free, which they were not doing. So it could be a big one. But I found that pretty startling when you think about something like the Android operating system divesting, something like AdWords getting separated from that company. It would be a big shakeup. And yes, it would impact Google. They would be okay in the long run, okay? But yeah, keep that one on your radar, because I imagine you're going to see some headlines come down the line the next year or two as that case plays out, the appeals plays out, and you have the Justice Department playing out where they're going to go with those proposals, and they battle it out over court. And you talk about a battle, man, right? You talk about a battle. But no matter how it happens, folks, Google's still got quite a hold on search. They're going to have a hold on search for a while. They're going to have YouTube for an extended period of time. They're going to have the Android operating system, whether it's divested or not. It's still going to exist. It's on 2.5 billion devices worldwide. It's going to exist there for some time. And so, yeah, maybe the monopoly just needs to trim the value of that monopoly. Let's see what they're at right now. But I found that pretty interesting. Pretty big picture there. They're at about $2 trillion right now, Google shares. All right, this market, we're 20 minutes in the trading day, and we haven't moved. We're holding up well, man. You got Amazon shares up by 2.8% right now. We jump back to Walmart on their numbers. Walmart There you go, up by 6.2%, up $4.33. You got Target right now, up 5% right now on their numbers. Yeah, big numbers across the board, man. All right, we got the S&Ps up by 57, folks. Stay tuned. We'll take a look at some of the other equities that are moving today. We got one more segment. Don't go away. I'll be right back, folks.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 58 points. Pretty much, you see, chopping around where we were by about 8:45, right after that move higher at 8:30. We're trading right now up by just more than 1%. NASDAQ charging higher. We're making session highs right now, up by 1.6% in the NASDAQ, Dow up a full percentage point, and the Russell up by 1 3/4%. Gives that back some of that gain. You got crude a little bit higher today, trading up by 99 pennies. We got the gold contract right now lower by $5. That is on the heels of, boy, we got some dollar strength out there, right? Yeah, giving it up a little bit. We're trading just above 103 right now on the dollar. We check in on yields, and the trend continuing to lower price, higher yield. Are we gonna get to 4%? We might get to 4% by the time I'm off the air. We're at 3.95. All right, We were a little bit lower. We were at 3.94, something like that. We're at 3.95%, the yield right now on that 10-year. We jump around to some of the equities as we wrap up the program completing. Alta Beauty up by 9% on Buffett coming into that equity. We check out Walmart shares up by 6.3%. We check out some of the retailers with Amazon. Look at Amazon charging higher. Ooh, up by $6, up by 3.7% for Amazon. That is quite a move for that equity. Target shares this morning up by almost 5% as well. Pretty remarkable. All right, and what else did I have? Yeah, I think that was, no, what did I have? No, that was basically it. I think I had one more. What are we talking about? Anything? That was pretty much it. We took a look at all the equities. It's quite a day, man. S&Ps, we're going to finish at session highs. We're catching another bid right now. We check in on NVIDIA. NVIDIA shares, there you go, up by 1.6%. Apple shares up by a full percentage point. Microsoft up by 0.75. We talk about Google. They're flat right now in the session. But retail sales, a big number, man. And the other thing we got was initial unemployment claims, 227,000 today. That one not getting talked about as much. But it's a healthy economy, man. Retail sales up 1% month over month. Initial jobless claims, 227,000. Walmart telling you the consumer is just fine. And we have cuts coming down the line. That's pretty interesting. All right, folks, thanks so much for kicking off the trading day right here. Stay tuned. You got Basil Chapman coming up next. We got Steve Rhodes, Larry Pesavento, Fast Market, and I believe Jacob's filling in for Tom one more day this afternoon as well. Folks, stay tuned. Basil Chapman's up next. Have a great Thursday, everybody. Thanks so much. We'll see you tomorrow.